Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. At the beginning of the year, March corn found great support at the 352 level, bounced around there for quite a bit, and has since found good resistance at the 371 number. 371 has been holding up pretty well, but the market has now tested that level quite a bit. We would believe that this current pattern that we see is a bit of a continuation pattern, and once prices are able to get through about 372, we anticipate that there might be enough strength to send prices up to test the next key level of resistance, and that level is about 382. In fact, given the way in which the market has made its move up into this current consolidation phase, we would not be surprised to see prices make its way up to about 390 or so. For the time being, we're going to be alert to see how prices react around the 373 number, because around 373 we would have confirmation above one standard deviation below the point of control. Our volume at price study reveals for us where that point of control exists. Currently, point of control is at 389 3/4, so essentially resistance up to about 391, as we mentioned just a moment ago, would be a perfect area for the prices to actually terminate and find very good resistance here at that point of control number. We can see prices again are consolidating near this band. One standard deviation below that point of control is 372.5. I believe once we get to 373, or at least we are able to post a close above 373, that should send prices up to the point of control, where we should be able to see sellers coming in to hold prices down for a bit. The December corn contract is showing much of the same. In fact, what we're looking at here is a similar continuation pattern where prices could make its way up to about 405 in an effort that's able to break above the 394 number. On this contract, we can see that volatility-based resistance has formed a bit of compression, at which point the market could very well find itself having trouble getting beyond the 406 number or so, which would also set up a potential lower double top, which could very well send prices back down again. It is also interesting to note that we are currently sitting at oversold, or rather, it is interesting to note that we're sitting at overbought. But the market looks like it wants to trade a bit upwards before really responding to being overbought. Similar to what we saw here when it was overbought, the market continued to trade a bit higher. Our projected resistance level for the soybean contract has been working out quite well, as we'll notice here, against this trend line that we drew. After having traced the trend line on the way up, we projected potential resistance to come in at this intersection here, and the market has been moving very well up against this resistance. In fact, it's been trading inside of a trading range similar to a trading range that it traded in previous to that price action. So what we're looking to happen here is potentially to have around February 3rd the market to end its consolidation phase and perhaps move either up or back down from this trading band in which it has been trading. We anticipate that this March beans contract will remain inside of its current trading band till about that February 3rd date, at which point it perhaps will then begin to trend in either direction, but we want to wait until then to get a feel for what the market is going to do. It bears to mention that the current point of control is at 888, which is exactly where this market has found the top of its trading band. And if it's able to get above 888, or essentially trade at 890 or higher, then we have the propensity for a move to the upside that would look to test the next area, one standard deviation above that point of control that sits at 916 or so. The November beans contract gives us another perspective. The stochastic looks like it's pointed up, at which point that leads us to believe that prices do want to head higher and at the very least test previous highs sitting at about 915 or so. So we would not be surprised to see this November beans contract make an advance up to about 915 to test resistance, at which point then we would wait for the market to give us a better vision as to where it wants to go beyond there if possible. The point of control level of 890 has done a really good job of holding prices in check, but once it's able to get beyond there, we would be looking for the next test of one standard deviation above the point of control, which will put it at about 907.5. After reaching volatility-based support, the July week contract has done very well in terms of bouncing off of support and tracing up against our natural geometric shape. Here the market continues to advance. We have a minimum price objective of about 505 to 510, as the market now has clearly moved to the overbought position, but looks like it still has a little bit of legs before it will terminate and find resistance. Coming up to the 505 number puts it at double top opportunity, and at which point it would also meet volatility based resistance up overhead. And so we like that 505 to 510 number as a good target projection level before markets could potentially head back down again. As a quick note, we are now firmly above one standard deviation below the point of control. Point of control sits at about 518 and a quarter. And so we have quite a bit of room to run if prices are able to sail above this level that is one standard deviation below that point of control. At which point we would find resistance near that 518 number, which is just above the current prices of 505 to 510 we mentioned in the previous chart. In closing, we're taking a look at the crude oil contract. We rolled the February information onto the March contract since the February contract came off of the board, and we really like what the market did here near the 2810 number when it found support right at our number and then turned back up to find resistance at volatility-based resistance. The market has since turned back down a bit, so if we see prices turn down and break back below 2810, we would then be looking for our next price threshold of about 2540 for next key support before the market can potentially put in a reasonable low that turns up for a bit of time, about 5 to 15 trading days at the minimum. On the other side of the equation, if somehow prices are able to hold up above 29.5, then we could see prices very well turn back up and test at a very minimum about 37, test about 34.5 on its way up before finding good resistance. Once again, it bears mentioning that the current resistance levels that crude oil found coincides with the number that is one standard deviation below the point of control at 3218. The point of control near term is at 3780, and this number here at 3218 really is where resistance came in right now, and so we really like or would like to see support near 29 and change to really be able to see prices head back up again. Otherwise, prices are most likely going to head lower and break previous low to find true support again. Thank you for taking your time to join us for our weekly market update, and we look forward to spending time with you again next week.